from before. Any other updates?
Yeah. So, I mean, really, like right now, we're in what I call treasury season. So we basically have companies that are on the stock market that are converting themselves into like buying crypto assets. So we have companies like Bitmine that's buying Ethereum. You know, Michael Saylor's company's buying Bitcoin.
Yeah, and not just a little bit as well. They're buying what, like
billions,
$25 billion at least for Bitmine is just buying Ethereum. That's like a lot of money. I think Bitcoin ETFs so far have taken in about 55 billion or a little bit more. And so like half of that money that's gone into Bitcoin ETFs over the last 1 year is being used by Bitmine right now to buy Ethereum.
And it's really, and over the last, from the last time we were here, about a month after, our last appearance on Fresh and Fit, we really started getting the Ethereum side of the company starting to buy up. That's why we've had such an impressive move on Ethereum. We've gone up somewhere between about like $1,500 to $2,000 from our last visit. So Ethereum is like really moving. It's basically within $200 to $300 of its all-time high at $4,800 right now. So, Ethereum and Bitcoin are like right there to move to like brand new all-time highs. We're really hopeful for Ethereum because once it can break $4,800, it's kind of like we're on
new all-time highs. $5,000 Ethereum. Once you get past for Bitcoin, once you get past 125,000, Ethereum past 5,500. Solana past 300. Once you get those three prices happening, you're going to basically get an alt season or an altcoin season move, which just means everything in crypto gets very bullish and starts to make moves. So we have treasury season happening basically over the summer until now. I was looking at the chart, and in the middle of June when we were last on the show, Ethereum was around $2,200 to $2,400. And right now it's $4,400, almost $4,500. So almost a 2x on price since the last time we were here for Ethereum. And then Bitcoin, I would have to double check, but I think this was the middle of June. And Bitcoin price was, let's see, actually that was a little bit back there on the chart. Bitcoin price was about $100,000 or $103,000, and now it's $115,000. So Bitcoin's kind of been sitting, holding price, moving a little bit, whereas Ethereum's been really rocketing. And if you look at, I can show charts and stuff a little bit later if we want, but if you look at the Ethereum to Bitcoin ratio, this has shifted the largest amount it has this entire bull market, and Bitcoin's been in a bull market ever since it broke $20,000 back in the beginning of 2023. So it's mainly been a Bitcoin bull market, but now it's shifting to Ethereum. And then what that does with the ETFs coming up here in October, where we got, what was it yesterday?
We got XRP and Dogecoin hitting ETFs. I think XRP did $37 million in its first day of trading, and we did it $17 million on Dogecoin, which is actually really, really good. That puts them that puts them like top. So out of like ETFs that launched in 2025, like 710 ETFs that launched, they're both in the top 10 of like ETF launch for first days. And so like tons of volume. So everyone's buying up basically crypto ETFs right now.
So and you guys gave those benchmarks, 300 for one of the coins. I think you said 5,500 Ethereum, 125K Bitcoin, and then was it 300 Solana, if I'm not mistaken?
Correct.
Yes.
Yeah. So, and you said that once we hit those benchmarks, altcoins are going to come out. Is that because at that point it allows the alternative coins to have a kind of a stable foundation with those three big boys hitting those price points?
What it enters is it makes us enter a more speculative market, which generally does attract your average everyday trader, which we call retail money, right, coming into this market. And we haven't really had that this whole cycle. We've had Wall Street money coming in, and that's been holding up Bitcoin and pushing stuff up pretty good. But retail really has not been active. Why? Because most Americans are either in debt or don't have that much in savings at the moment, especially compared to where we were in 2021, right? And so it's kind of like you're missing, like the way that I explain it on my streams is that when you get a whale coming into the market, you get price going up and they splash in with their money. So when Wall Street, comes in here, then you make a good splash, price goes up, but then quickly you kind of like roll over and price just starts kind of slowly coming down because you don't have the minnows of retail in the market buying up price little by little. And so that kind of gets you these big moves, but they're not like as sustainable as they would be in 2021. So if we do get past those prices and we do start getting these ETFs then you do get Wall Street money starting to come into Solana, Dogecoin, Ripple, Litecoin, Crow token, CRO from crypto.com is getting $6.5 billion from the Trump administration being put into it. I would say the Trump family is probably the better.
Eric Trump's really the one really behind that, but basically it's Trump's crypto arm, basically, right?
Yeah.
They're backing Crow, but really the Trump administration's backing crypto.com because crypto.com is going to launch all their ETFs and stable coins on crypto.com. So basically there's kind of these little mafias inside of the United States that are all choosing their side, from PayPal mafia to the Trump administration, and kind of like Ethereum, like an OG crypto money, basically. So everyone's kind of picking their seat, picking their exchanges. And that's another thing, is that we're about to have crypto.com go public in 2026. And it's all this news happened in the last kind of 3 months, where before, we were kind of we have the Bitcoin ETF and we have Ethereum ETF, but only the Bitcoin was being bought up. Yeah. Now we're getting all the ETFs for we just had XRP, Dogecoin, and Solana is coming up really, really soon. And
so probably between the 2nd to 3rd week of October, the Solana one should get approved. Most of the approvals for the ETFs will happen between October and November. And so let's say, for example, retail, we get up in speculative prices, and maybe the only retail we have in crypto is your crypto natives, guys like us who've been around for a few cycles, or people who bought the lows in 23 and 24. If those people are the only ones in the market, then what you're more likely to get is you get the ETF money coming into the coins that we mentioned, and quality coins getting bought up. SUI is another US based coin that gets a lot of Wall Street money or VC money coming into it. But other coins might not do as well during that time. They'll still go up with the market, but they might go up a little bit more slowly because we don't have a lot of money printing happening right now. But with the rate cuts, that's going to start getting people a little bit more interested. And this is part of what could happen to crypto this cycle that's different from every other cycle, is we could bleed into next year, which would make the high that we're getting here in crypto for Bitcoin specifically later in time than we've gotten the last 3-4 year cycles. And all that means is that we get a little bit of an extended time for a bull market because rate cuts are going into next year. And it's probably more likely that we get a Bitcoin all-time high sometime in Q1 or maybe early Q2 at latest next year. And since Wall Street's coming in, 4-year cycle-wise, you measure cycles low to low. You don't measure the high. And so that's one mistake that everybody is in crypto is making right now, is they're saying the 4-year cycle's dead because we're not getting the high exactly 4 years from the last one, which would be in October or November. And I think we're going to bleed in next year, mainly because of what the Fed's doing. And so that's going to throw a lot of people off because they think cycles are determined by the highs, but cycles are actually determined by their lows. So the thing that's the interesting wrinkle for next year is, let's say we go up into about February or March and we get Bitcoin, let's say $200,000 Bitcoin in February, then the bear market would be most likely shorter. You'd get the low for the bear market next Q4, so a year from now.
Same year in
2026, Q4 2026. So between October to December next year, that's where you're most likely to get Bitcoin at its low. And wherever it gets its high, it'll most likely be a 70% drop from there. So that would be about $60,000 Bitcoin if you dropped from 200,000 at the peak. So by having a cycle high go a little bit later into early 26, that'll make the bear market shorter in time. So instead of a whole year, you might get only 6 or 9 months of price going down before Bitcoin bottoms. Wall Street buys it up heavy, and then it kind of holds that into 27. And then 27, we're back in business again. Yeah. So having a shorter bear market is a little bit more the characteristic of the S&P 500 in traditional markets. And now that Wall Street's in there, or in crypto, we're kind of taking on the personality of traditional markets a little bit more than we had in the past.
Yeah, that's why we're so happy about interest rate cuts. I mean, honestly, the Federal Reserve should have been cutting since January. I understand, right before the elections happened in 24, we had a 50 basis point cut. That's great. The Federal Reserve basically gave all these bullshit answers about hey, we're with the economy strong and everything like that. But basically, they didn't want to cut during the election. All right, whatever. Right. As soon as Trump got elected, the year ticked over. They should have started cutting in January. They didn't, and it's been pretty. I mean, it's really hard to like fight against the data, basically saying that it's not politically motivated. But Jerome Powell is basically going to not be reassigned back at the head of the Federal Reserve. He's going to basically lose his job on May 12th next year, basically. And they've said already that they're going to cut 2 more times, just like Fresh said. They may just put all 50 basis points in October 29th. Or just split them up 25 and 25 between October and then the December meeting, which is on the 10th of December.
So real quick, Miguel, let's say they do cut the rates 2 more times before the year ends.
Okay.
And we heard from sources that Bitcoin may go down either end of this year or next year. Is that going to prolong Bitcoin going down or make it go down faster, the rates being cut?
No, so the interest rate cuts are just overall positive. So cheaper access to cheaper money is always better, right? So the rates have been too high for too long. It pretty much takes the interest rates down to like 3.5% basically, with another 50 basis point cut, and it's going to help the stock market out. So these cuts are really good for the stock market. Which, if the stock market goes up, it also pushes crypto up because the stock market and crypto are now pretty connected now. So stocks are literally at all-time highs. If these cuts that are happening along, if the market keeps getting the cuts they want, this will help kind of continue the bull run that's happening in stocks right now, and that'll help propel and push money from the ETFs into crypto, and then basically crypto will keep going up. But I mean, we're telling our students as well, like sometime October, November, it could be early December, we're going to get a top in Bitcoin. We're going to take some profits, and then we're going to basically see when to get back into the market in January, or maybe it's in kind of late December, basically. But like, there's going to be like an all-time high for 2025. It's going to happen sometime in the next 3 months, right? But then the big thing is like, here's like the big thing is a lot of people are going to think the cycle's over. But with all this bullish news, Jerome Powell even said there's going to be another cut in 26. This is the only thing I don't like what Jerome Powell has said, is that they said that there's going to be one more cut in 26 and just one more cut in 27, but he's not going to be in charge anymore. Trump's going to put his guy in charge, and everybody wants to cut already. So like, it's very likely by May onwards, there's going to be even more cuts. That's going to help the economy. This is really good for real estate. And I'm hoping maybe like real estate bottoms out in December of 26 or maybe middle of 27 on the residential real estate side. Just because they need, people want to refinance, and people want to basically, like, some people are just stuck in their house. They're house rich, but cash poor. And that's going to be huge for the economy, because people are going to be, if you bought a house from like 2009 to like 2019, you have equity, tons of equity.
Yeah.
But if you sell your house and buy somewhere else, it's like their payment's going to be higher unless you just buy it cash. But a lot of people, they want to like just get another 30-year mortgage, have all this extra cash, but the payment's like ridiculous. So that's what's stopping a lot of people from moving around. And some people just want to refinance and take the money out of their house. So like, that's what's going to spur along another bull run later on in 27, 28, and 29, is like the refinance boom that's going to happen in America through real estate. Because that's been one thing that we've had, like, the 21 cycle ended in November, but what really started the crash was in January. The rates started going up, and we literally had, like, in 2022, the rates just exploded. So all of 22, 23, and a portion of 24, they jacked us up to like 5.5% from like zero. We went from zero rates to 5.5%. So this is why, like, we had, if you took out a 30-year mortgage in 24, it was at 7 or 8%. And that's with good credit.
7%, right?
Yeah, it's really high. Now it's come down. I think maybe Myron might know this better than me, but like, it's probably like 4 to 5% probably on a 30-year, I would imagine, right now, because rates are starting to come down. But so it's very likely we're going to get 2 cuts in the next